So every new year brings the same headlines. House prices set to crash. Mortgage rates about to soar. And 2026 will be the worst year to buy ever. Well, I tell you what, rather than listen to some of the rubbish that gets spouted on Twitter or X or whatever it's called these days, today we're going to use information from people like the Nationwide, Halifax, and other mortgage market experts. And we're going to answer one simple question. What does 2026 realistically look like for homeowners, first-time buyers, those wanting to remortgage in 2026? Now, the Nationwide summed up 2025 in one word: resilient. Even with mortgage rates running at 3 times higher than the post-pandemic lows, actual approval rates stayed close to pre-COVID levels. And yes, there was some short-term volatility with the stamp duty changes, but demand didn't dry up, it didn't disappear. And that tells us that the market's adapted. Now, house price growth has slowed down. It's gone from nearly 5% at the end of 2024 to around 2% by the end of 2025. But the important bit is that wage growth has continued to outstrip house price growth. And this increases one key measure: affordability. So for 2026, Nationwide is expecting 2 to 4% house price growth. Halifax are saying it's more like 1 to 3%. So there's no bubble here. It's a normalising, stable market. And exactly as we've said many times before, the regions have outperformed London, especially the North, the Midlands, and Northern Ireland. The North-South divide, the price gap between London and the rest of the country, is at its smallest since 2013. And this reinforces something I say on a regular basis. Property is local. Don't look at national headlines. They don't necessarily reflect what's going on in your area, even your town or your street. With property, location is everything. So December saw the Bank of England base rate dropping down to 3.75%. And there's all kinds of rumours flying around about what's going to happen next. But most of the real experts agree. We should be at around 3.5% by the end of next year. We may see rates dip lower during the year, but they'll probably go back up again. And mortgage market experts are expecting that we're going to see average fixed rates settling in the 4.3 to 4.5% region. And as we've got it at the moment, we expect to see the continuation of some sub 3% deals. But these will only be on lower loan to values and relatively clean cases. So rates might not be falling particularly fast. But what really matters is the direction of travel. Now, there's about 1.8 million people due to remortgage next year. And this isn't another 2023 where rates jump up overnight, but it still needs planning. And the choice of what you do when you remortgage this time is significantly different to what we've seen over the last couple of years. Yes, you can opt for a fixed rate, but some borrowers might even start considering trackers to be the smart move. There's no right answer. It really is down to what fits your situation. So should we be worried about 2026? I don't think so. Unless something catastrophic happens. 2026 is looking like a year of stability, gradual improvement, and hopefully some better decision making. No fear, no panic, just preparation. And if you're looking to buy your first home, move house, remortgage, downsize, then planning and preparation are key. The earlier you start to plan, the more options you're going to have available. I'm Patrick Weightman, your local East Midlands mortgage and protection advisor, serving clients up and down the UK. Make sure you follow along for more, and my links are in the bio if you want to get in touch. Speak to you soon. Bye-bye.